Hey guys, thanks for joining us. Just watching some people come in and hopefully everything's working as expected. There we go, got some coming in. Thank you for joining us this evening. If you haven't met me before, my name's Kerrin. I'm Senior Client Development Manager here at Betfair in Australia. My role is to help to grow automation on the exchange. Tonight, we're a little less focused on automation than normal, but I'll give you a bit of context on that in a minute. Why are we here? So we're here because at Betfair, we believe in creating more winners. To do that, we believe in education, we believe in knowledge sharing, and in trying to take the learnings that a lot of our community have in this space and sharing those and disseminating that knowledge so that we can learn from new challenges instead of old ones. To that end, tonight we're focusing on staking strategies and bankroll management, which are fundamental parts of anyone's long-term approach to wagering, whatever your take is. Whether you are someone who's automated and you're trying to decide how to bet your model, what staking strategies and betting logic your bot should follow. As we've said countless times before, you and I could follow the same model and end up with very different results, as simply as a result of the staking strategies that we chose to employ. But the same thing applies if you're betting manually. Are you simply betting $100 per selection? Are you betting to win $100 per selection? Is it relevant to the size of your bank? Is it relevant to the size of the edge you think you have in that market? These are all the things that we're going to discuss tonight. So it's relevant whether you are automated or manual. As long as you're interested in improving what you do, this is the right place to be. A couple of things before we start. So if you're not already part of the Betfair Quants Slack community, I seriously suggest you join. It's a great community-owned forum where it's mainly automated Betfair focused clients, mainly Australian, but there's international as well, where people are happy to share their learnings, their experience, their challenges, and sometimes just some fun banter. And it's a great way of sharing what you learn, sharing your challenges, but also not being alone in the journey. And it's definitely one of my favorite parts of what we do here is being part of that community. So if you're not part, I do suggest that you join the conversation. I'll get Ivan to share the link. You can join there. If you're watching this on YouTube later on, feel free to shoot us an email, or if you're more generally looking for some support, automation@betfair.com.au, and you'll get me, Ivan and Ben, and we'll help you out. If you are on Slack, try and join the meetups channel. That's where the chatter happens during one of these. Obviously, you can drop questions in the Q&A box as we go down in Zoom, but equally you can chuck them in Slack, and I'll keep half an eye on that as we go. Without further ado, Jace. Jace is joining us tonight. Very grateful for that. Jason has a wealth of knowledge and experience on the exchange, and someone I respect very much. And really appreciate him sharing his experiences tonight. We're very lucky that Jace will also be following this up with a bit of a tutorial on the Automation Hub in the future, so that you'll be able to walk through this yourself. Hey Jace, thank you very much. Really appreciate it.
No problem. Thanks for having me.
Always very, very grateful. Someday we'll get you this in person again. Someday. Touch wood.
Once all this is over.
Yeah, someday. Can you give a bit of an intro to you and your background on the exchange and pre the exchange?
Yep. So I've probably been punting on the exchange for about 5 years, maybe more seriously about 3 years. Before that, I was a quant in financial services, mainly doing risk management. So this topic today is something that's been pretty close to me for my professional life and my punting life. So hopefully I can bring some of my experience, both pre and post punting, to this presentation.
I love it. No, I really appreciate that. I guess we might premise bits of this with what you're sharing is your experience, your thoughts, some of the approaches that you've taken over time, some of your own analysis of some of the popular strategies that are around. And as always, I love a good disclaimer. There are some things where you're going to say this probably isn't how you should do it. Don't do it this way. But otherwise, it's so much for just horses for courses, right? And situational. And it's not necessarily that one thing's better than another. It just might be better for that situation, for that person. Is that fair?
Exactly. Yep.
Cool. Do you want to do a screen share? We'll have a look.
Yeah, I'll just jump straight
Given
into
I know
it.
that you've got some notes to work through.
Is that
It's still working on it. I've got a black screen right now. I don't know whether anyone else can see it. I can't see it.
Okay.
Maybe quit and try again.
Yeah, let me try again.
There we go. Got it. Oh, no, and it went away again.
Yeah, I just stopped it. Let me try again.
There we go. Got it. And if there's
Okay,
any
good.
chance you can talk a little louder, Jace, that would be great.
Yep. Okay.
Thank you.
Awesome. So I'll just jump straight into it. Just do want to reiterate again Kerrin's point that if you do have any questions or any points, please do just chuck a question into the Zoom. I think it's always a bit more fun when these are interactive rather than me just talking to a set of slides for the next 30 to 60 minutes.
Completely agree.
But yeah, I'll get straight into it. I did just want to introduce a concept that's mainly used in the casino context, and it's called gambler's ruin. So gambler's ruin says that a gambler playing a fair game, so i.e. having an edge of 0, will eventually go broke regardless of their betting system. And this is due to the gambler having a finite bankroll, who is playing against the house who has an infinite bankroll. And again, although gambler's ruin was conceived with a fair or negative edge game in mind, I think it's really important to get familiar with the concept that a finite bankroll is why we have bankroll management in the first place. So 2 points there. Number one, obviously, it should be obvious to all of us that if we don't have a winning system, so our edge isn't positive, no matter how fancy our staking system is, we're always going to lose eventually. But on the flip side, none of us have an infinite bankroll, and if we did, we wouldn't be betting. But the fact that we have a finite bankroll is that we're going to have to accept the fact that there will be statistically a non-zero probability that we'll go broke. And I do have a little asterisk there that, with proportional betting, for example, where we're betting a percentage of our bank, theoretically we can't go broke, but in reality, there's going to be a point where we can no longer break down our bank into smaller units.
When you no longer have a full cent or min bet or whatever the deal is. Yeah.
Or if you're betting on Betfair, you can't put a $5 BSP bet down if you're betting on VSP.
Yep.
So yeah, I just want to emphasize the point that if we are betting, and most of us probably realize this, that we do have to accept there will be some risk. There's no free lunch in this game.
Very fair.
So why is staking important? So staking, like I said before, is all about bankroll management. Having a winning strategy doesn't guarantee that money will be made. And in fact, many gamblers with winning models do go broke. And the main reason is that they don't have sound bankroll management. And it's something that I've learned early on when I started betting. Certain strategies I would not have the best bankroll management, and those strategies would go broke. And there were many lessons that I had to learn through that. So staking is all about...
Basically, everyone early on has that moment where they find that awesome model, that awesome edge, and you don't want to lose out, and you scale up, and almost without fault, it will go badly, and you'll overstake. I don't think I know anyone who doesn't have a variation on that story, be it manual, be it whatever your edge was, and often the early ones aren't an edge, right? And even if it goes well to begin with, almost without fault, we've all got a version of that. So we've all been burned.
100%.
So.
And it's almost better to be burnt early. So at least you learn those lessons early. it's much worse to go on a good run, well, I feel anyway, go on a good run, and then bad behaviors are reinforced because you think you're doing very well. And then when you eventually get burnt later, it's going to hurt a lot more. So learn those lessons early.
You might grow your bank too in that initial phase and then burn more.
Yeah, and that's going to hurt a lot more.
Completely agree.
So yeah, staking is just about balancing our risk versus reward. And like Kerrin said before, that risk reward equation is different for everyone. So obviously we want to maximize how much we're going to make, but the constraint is how much risk are we willing to take. So we're too risk inclined and bet aggressively, there's a good chance we'll go broke. Alternatively, if we're too risk averse and bet conservatively, we won't make much money. And what's the point? So we do want to maximize our returns within these risk constraints. And again, that's going to be a personal decision for everyone.
I think there's a third element, fourth element, depending on how you look at it, to that first point, that sometimes it's not necessarily that you'll go broke, but that your variance curve may see you trending too far down where you don't have the risk appetite even more. And even if it would then bounce back up, it's something I've said for years, if you can track what your variance curve looks like, you should never stake to a point where your down point is going to be low enough that you're going to turn it off, because you'll then never get back up to positive, right? And even if your bankroll can cope with that, that's where this veers into that mental game stuff, right? Yeah, you also have to be able, we're all human. We can't just switch off. Even automation, we're still human. Yeah, I mean, that element needs to be cognizant as well, right?
Yes, 100%. And I think that ties in pretty well with my next slide, that it's not just objectives and risk tolerance. The third part that I think is often overlooked is our emotions. So again, I just want to reiterate, there is no right answer. When you Google, staking strategies in the Google search engine, there's probably going to be a lot of websites claiming that there is an optimal way to stake, but the reality is that there isn't. It's going to be a personal one based on risk tolerance, objectives, and your emotional well-being. And like Kerrin said, as much as we'd like to think we are, even with automation, we're not robots. And I think most people understand 1 and 2 pretty well. You want to maximize your objectives while minimizing your risk. I think that third one is often overlooked. I overlooked it in my career. I probably overlook it now. I think it's human nature to think that we're better at managing our emotions than we are. And I learned some pretty hard lessons early on to humble myself and bring myself back to reality that I am human, and what happens in my betting will affect not only my betting but my personal life as well. So most people probably know the definition of being in tilt, mostly used in the poker world, but this is just basically when you get frustrated emotionally, most of the time based on adverse outcomes going against you. So I think a good example of how being on tilt might manifest itself is you might find a way to convince yourself that wrong decisions are right ones. So this happened to me early in my betting career, is that I do the form early in the day. I'll have a set of bets that I wanted to bet on during the day. I put them down. I may not put them down. I may put them down closer to jump time. But let's say in the morning, I just run through a bad set of variance and all those bets lose. When it comes afternoon time, I might find a way to convince myself to double down on my afternoon bets. And there might be logical ways that I do that. I might, I don't know, people use tipsters, but I might look on Twitter and see, a bunch of tipsters like the same selection that I do. I might look at some more video and look for only things that reinforce the opinion I had originally, and convince myself, yep, putting double the amount that I originally wanted to on this selection is the right thing. But obviously you wouldn't do that if the morning didn't go against you. So, it's probably not the right thing to do. And like I said before, I think the worst thing that can happen is that in the long run, it might be good in the short run, is that selection wins with the one that you double down on. because
Literally,
you're gonna get burnt. Yeah.
Someone's just posted in Slack quoting Tendler that winning runs kill your bank. And it's so true, right? It's not the losses that kill you. It's when it goes well and you double down, and and it's reinforcing. It's that old adage: just because the bet wins doesn't mean it was the right bet, and just because it loses doesn't mean it's the wrong one.
100%.
If actually, Ivan, can you share a link, please, to the mental game workshop we did at the beginning of, I think it was the beginning of last year. So it was Paul Smith who did that one with us, and I think so many of the same things that you're saying. And I love this, that it's very different people but very similar experiences. And I think the key takeaway here is, like you said, you don't get to stop because your emotions don't work that way, right? And you change and your environment changes and everything else. And it's a bit like you can't just ignore, get a model and then ignore it. You can't just ignore your mental game, your emotions either. And if anyone's keen on this stuff, like obviously watch that YouTube thing, but also Jared Tendler, he's the mental game of poker. He's got a new mental game of trading book, which is far more akin to the sort of work that a lot of you guys do, and might be relevant to people. But it's just great to see that that's one of your three things here, that this isn't just numbers.
Yeah, and I think you have to be honest with yourself as much as you can, that some people will be better at dealing with their emotions than others, and if you're someone that admittedly can't deal with emotions that well, I think you do want to scale your risk tolerance, your objectives to deal with that, because A, you don't want your emotions to affect your betting, but B, you don't want your emotions in your betting to affect your personal life, because I think that's just a downward spiral on all accounts.
It's not what we're here for, right?
Exactly. Yeah, you don't want to, get angry at your friends, get angry at your partner because you had a losing run. You want as much as you can to separate the two.
Completely agree.
I guess the second thing I want to put on this emotions point is, and it's something that I had to deal with pretty early on, is that just because you can increase your stakes based on your bankroll, theoretically, doesn't mean you should. I think it's hard, and some people, again, might be better than others, to not put emotional value to a dollar amount. So I guess what I mean by that is, let's say I started betting $1,000 a selection, and then since I've got a winning model, my bank doubles, and now I'm betting $2,000 a selection. Even though the bank theoretically says I can accommodate a $2,000 stake size, I found anyway, when I was betting this and losing, just say losing a $2,000 bet, it's hard not to attribute things. Yeah, it's hard not to attribute things like, that's an iPhone, that's a MacBook, that's a nice hotel and a nice dinner with a partner. And that threshold is going to be different for everyone. But just, again, I just want to reiterate, you don't want your betting life to affect your personal life. And if that's happening because your stake size is increasing, then you're probably wise to wind it back until you get used to it.
I remember some years ago talking to one of the pros on the exchange and asking about what are some of the best things that you do to manage your betting. And the first thing he went to was meditation and fitness, which was not what was expected as a response with the sort of person I was talking to. It's like, because otherwise he couldn't cope. That for him, that was how he separated the two. Paul said a similar thing about losing runs, and for him it was around that sort of 30k mark that he's like, well, that's the point for me, when he can't just convince himself that that's just a number anymore, that's now a family holiday, or that's a car, or whatever that 30, like you said, what does that number mean? It's really hard just to make them numbers, and you're kidding yourself if you think that you can past a certain point, right?
Yeah. Like you said, we're not robots. There's going to be the human element in this, and then it's not about ignoring the human element, or trying to eliminate the human element. I think it's trying to manage the human element. I think we just got to accept that's part and parcel of what we do. We're humans. We're we're doing something that we're trying to put as much logic into it as possible, but we can't ignore that the human element will come into play.
And acknowledging it.
Yeah.
I like that.
Okay, so now we'll get on to the meat of the presentation. So I'll just discuss, and this is by no means exhaustive, but these are probably some of the more popular staking methods, and ones that I've delved into a bit more. So the first one is fixed staking. The second one is proportional staking, and I split that up into two. So I think there's two versions of this. The first one is betting a percentage of your bankroll. And the second one is betting to win a certain amount relative to your bankroll. And I'll get into the difference between that a bit later. The three is progressive staking. And I've used the martingale system to illustrate that, but there are two variations of that. Yeah.
Thank you.
And the fourth is Kelly staking, which is what most serious bettors advocate for. And I'll go into a bit more about the pros and cons of that as well. So what I've done, rather than just explaining the staking methods, which everyone can just look on Google to find, is I've created a little script in Python to assess each of the methods. So how I've done it is I've simulated each method 10,000 times, and I've set the following criteria. Start with a starting bank of $1,000. Ruin defined as the bank going down to less than $5. And I've just chose this arbitrarily, but also it ties in well with if you're placing a BSP bet. Yeah, you can't place a minimum BSP bet anymore. So our objective is to quadruple our money, so to get to $4,000. Just for simplicity, we'll assume we have a flat edge of 5% on all of our bets. And since I guess a lot of the people in the Slack community are horse racing punters, so the odds will change. I've made the odds we're gonna take on our selections to be a variable as well. So I've assumed that it's between 1.5 and 5. And
we like favorites.
Yeah. And bets are drawn uniformly in this range. So what I'll do also is I'll send this code to Kerrin and the team afterwards, and they'll put it on GitHub so you can have a play around. I think it's always useful if you have a strategy with an assumed edge and you've back tested it, just to see based on simulations, what's the probability that you're going to make whatever your objective is, and what's the probability you're gonna lose your bank, and just play around with those constraints to see what's the most comfortable for you.
And this is what we're going to, this will be part of the tutorial too, so people will be able to play around with it there as well. This is your friendly reminder to talk louder.
Okay, sorry. I don't know if getting off the AirPods might. Okay, if I'm still too soft, let me know and I'll just get off the AirPods. Is that okay now though? Is that loud enough?
That's better.
Yeah,
no, that's better. Thanks.
Beautiful. So the first one is the most simple, and what people probably do if they're a novice punter or just starting to get a bit more serious. And it's just basically fixed staking. So as it says, all you're doing is putting a set amount on each selection. It doesn't matter what your edge is. It doesn't matter what the odds are. You're just going to always put down, for example, $10 on every bet. So stake equals X, where X is some fixed amount. So the pros obviously is that it's simple to use. But the cons are, well, there's probably a lot of cons, but the two main ones are that it doesn't account for the size of your current bank. So it can take a long time to reach your desired objective. If you think about it, if you're always putting $20 on a selection, as your bank grows, you're always still going to be putting $20 on that selection, which is proportionally a lower and lower amount of your bank.
It's also really easy to back test. And that's not saying that the others aren't back testable, but bearing in mind that we have a quant here who's very comfortable with simulations, across a range of capacities and skills, flat is really easy to test. And that's often it's the same as limit BSP bet rights, right? It may not be the perfect betting system, but it's very easy to simulate. So that's another benefit, I think.
Yeah, 100%. And like on that point, like I personally, I back test using pretty much all the staking systems, except for probably progressive.
And I
think
heard Martingale, yeah.
Yeah, no martingale. And I think it's good that, like, ideally you do want your back test to be positive across all staking systems. Obviously, there might be some cases where it isn't, but at least you want to find out why it's not. It might be, you're putting all your profits coming from you putting a decent bet on a long odds, and you kind of want to know, is that outlier making your system profitable? Because if it is, that's probably not something that's going to be so reliable in the future.
Sustainable.
Yeah, sustainable, exactly. So on the right, what I've done is I put an example of the simulations, like a potential path of the simulations, one for the success and one for the failure. So you can see that with flat staking, it actually takes quite a long time for us to reach our objective. So 2,449 bets on average. And of the 10,000 simulations, 89% were a success. And on the flip side, if we go on a bad run, since we are putting proportionally more of our bank on a selection, it's actually faster to go to ruin. So it takes on average 679 bets to fail if we do fail.
I like that, and I like that looking at those numbers, it does give you that context for why. As you said, it's fine if you're going up, but as soon as you go down, there's no way to help pick you back out of it either.
Yeah,
exactly. You're not being more cautious, but you're also not playing your edge in a way that's going to help you, take advantage of that edge.
Yeah. So the next staking system is what people kind of migrate to once they get migrate to once they get a bit more serious. Is proportional staking. So proportional staking defines the bet stake size based on a percentage of your current bank. So as your bank increases, the absolute value of your stake increases, and vice versa for your bank decreases. So there's a formula there. I won't bother going through it. But the pros for this approach is that it kind of overcomes the deficits of fixed staking. Is that when we do increase our bank, we are betting more. So we're going to maintain our same relative risk reward profile no matter what our bank size is. And on the flip side, our risk of ruin is decreased when the bank decreases. The con of this is that if you do start on a bad run and your stake size decreases, it can take a very long time for you to recoup your losses. And again,
which we see on some of those trajectories back up when they're small. Yeah.
And again, on the right, example of a success and a failure. And it's kind of interesting on the success. You can see that at about bet 1,300, it just seems to have gotten pretty lucky there. But I don't think that's a feature of proportional staking. That's just an interesting simulation.
Can I ask, and this is harking back to what you said earlier, 2% is all well and good, but some banks can get nice and big. Would you manage that either by trusting and continuing with the 2%, which I don't think is going to be your answer, capping it, a bit like, when we get to Kelly, some people have capped Kelly. Do you cap your proportional, or do you manage it by managing what's in your account and simply removing beyond X, or something else that I haven't thought of?
Yeah, I think this is going to be a pretty bad response, but I think it all depends. I think I'll get to it a bit later, but in theory, if your bank increases, you want to increase your bet size, but this isn't always possible. On the exchange, there's going to be what we call odd slippage. You're not going to be able to put down your full amount that you want on. It mainly corresponds to longer shots. And if you're betting on bookies, you're going to run out of bookies that will take a bet from you. So you're not always going to be able to bet how you like. So that's going to be another constraint you have to deal with. But yeah, it depends. So like if I was testing out a strategy, I was betting 2% on my bankroll. I'm probably going to get a bit more confident if the bankroll increases. I've got to do a bit more work, as we know in practice, how the results aren't always going to match the back test. But if the results do match the back test, I'm going to be more confident on my my betting strategy, and I might shift that to 3%, whatever it may be. So it is really a dynamic thing. I don't think it will ever change. What I like to do is have like a monthly check-in. So you never really want to change these things. You don't want to be too reactive and change things on a daily basis, because volatility is just part and parcel of betting. But you do want to have a check-in where you're saying, am I doing the right thing, given all I know? Since I'm more confident in my betting strategy, should I be betting more? And the answer might be yes, but the answer might be no.
Is there a point where, your previous point about there might be a cap on your confidence, and not necessarily confidence in your strategy, but as you said, maybe 2K is where you start stressing and you don't actually want to go above that. And at the point at which that's 2% of your bank, is there a point when this basically becomes flat staking in an ideal world? If you don't go below that bank?
Yeah. I think theoretically
just
could.
Worth considering.
Yeah, if your bank's gotten so big that you should be betting a lot more, but you emotionally can't deal with it, then yeah, I guess, and you're putting a cap on every bet, then I guess you revert to flat staking.
Interesting to consider, right?
Yeah.
I've got a question while we're on proportional staking here. Have you had any experience or opinion on the square root staking plan, perhaps applied with proportional staking? Is that one you've come across? It's not one that's hit that I have.
I haven't personally used it, but I guess just based on thinking about it, you're betting less on is that the square root staking method relative to odds? So yeah, you're betting less on longer shots?
It's not one that I've used. I use Kelly, I use flat, I use proportional, variations on all of those. I haven't used square root. I'll look it up.
Yeah, maybe we'll take that.
We'll come back to you.
Yeah.
Good question. Please continue.
The next one is another version of proportional staking, but instead of betting a fixed amount of our bank, we're going to bet a fixed amount. So we're going to bet an amount such that we win a certain amount. So for example, if we wanted to always win $1,000, then obviously how much we bet would depend on the odds of the selection. We're going to bet more on shorter odds and less on longer odds. The pros are pretty similar to proportional banking, that it reduces the risk of ruin because your stakes decrease and it increases your bets when your bank increases. But one thing that when I was putting together these slides, I had to think about it, that this probably results in lower odds slippage than proportional staking using a fixed percentage of our bank, just because if we're betting more on shorter odds and less on longer odds, there tends to be more liquidity, not always, but there tends to be more liquidity around the shorter odds range compared to the longer odds. So it tends to, by design, result in lower odds slippage. And also it ties in quite well with minimum bet laws, that minimum bet laws are defined as you can only win a certain amount. So this ties in pretty well with that.
It's interesting, a lot of people, I work with a lot of people and their automations, and through their automation journey, a lot of people use to win, but without the proportional piece. So they won't do it relative to their bank account, particularly as they're going through a journey. So a journey will often look something like flat to win X, but X doesn't change unless X changes on the price range. So that's one I see quite a bit, is people who know that, believe that they are better at pricing things between X and Y, and therefore they want to win more when they're in that space, as opposed to That's always interesting. It's interesting. I rarely see people use this to return or to profit a proportion of their bank. I see the other ones all the time, but this one I don't see very often. It's interesting.
I think you're right.
It's very
I think
sensible. Like it's not a criticism of it.
Yeah, but I think a point I would make there is, even if and I do it too, so I actually don't, just because it's more headache. If my bank goes up and down, I'm not actually changing my stake, how much I want to win, but I probably am doing it at the monthly check-in. So these people that are winning a certain amount, if their bank was to 5x in the next month, they probably would increase that
change that variable.
That they're going to do. Yeah, so it's just not
manual
as dynamic as this formula. Yeah, exactly. It's just at that monthly check-in.
That's a good way of putting it and a good consideration. Just as a clarity, this is backing, isn't it? We're not laying, we're backing at X. Yeah.
Yeah, this is all backing. So everything I'm talking about is backing, but you know, the
principles apply.
Same principle applies to laying, exactly. And I'll just go through this quickly. So in the simulation, I set it as to win 5% on my bankroll, and those in 96% of the simulations I was successful, and in 4% I went broke.
But it took you longer to go broke, twice as long. And I like that personally, because if there's something that's wrong, it gives you longer to fix it.
Yes.
It's always a benefit. Quick losses can kill you, right? So
yeah, exactly. Okay, so
everyone's
the next
favorite
one, so this is a bit divisive, and martingale systems are pretty popular among scammers into selling a system. So when I said there's no right answer, I'm going to caveat that in saying, in my opinion, and happy to be proven wrong, I can't think of a good reason on why anyone with a winning system would martingale. So just to explain it a bit, the martingale betting system is a progressive staking system whereby after every loss, we stake in an amount that will recoup all our previous losses and also win the desired amount. So after every win, we reset that martingale run, and we reset it to win the initial desired amount. So an example is if we're just betting a 50-50, like a handicap market, bet $10, it wins, we bank that $10, move on to the next run. If it loses, we're going to increase our stake to $20 because we want to recoup the $10, but also win $10 again. If that loses, then we're going to bet $30 and so on. And then you get the idea. For the pros, I had to think of some pros for this. Each betting run has a high probability of winning. So obviously, since we're putting a lot of bets together and only one of them has to win, each run has a high probability of winning. And if we're on a string of good luck, our bank can increase quite quickly. The con and why you shouldn't do this is it only takes one bad run to wipe out your entire bank. And trust me, if you bet long enough, it will happen.
I think that's one of the caveats on this too, right? That in an ideal world where you had an unlimited bank, might be a slightly different balance, but no one has. The house does, quotes, but if I got $1 every time someone came to me over the last few years pitching some variation of this, I could retire right now. Everyone's tried it. Everyone's been there.
Yeah.
Google it. I will be sending people back to this part of the video when they call me in the future and telling them to take it from someone other than me. As you said, not necessarily a right way, but definitely a wrong way.
Yes, and it's interesting that you bring up the casino. Like even though they, we think of them having an infinite bankroll, they don't want to take the risk that they're going to go broke either, which is why they set caps on their tables.
Yes.
That no one can just keep on martingaling them, because they themselves don't have an infinite bankroll. If they lose an amount, they will go broke.
That's the proof right there, isn't it?
Yeah.
Love it. Thank you.
These graphs are pretty interesting. You look on the left one is an example of a success, but if you look at 2 of the points there, very close to becoming a failure. So it was just lucky that the last bet was a success, or else it would have been a failure.
Yes.
And probably not surprisingly, this one is the only staking system, if I set it at an objective of winning 3% on my bankroll, the chance of ruin is actually higher than my chance to succeed, even if I have a positive edge. So there's a 54% chance of ruin and a 46% chance that I will achieve my objective. I guess a pro is that you're going to win fast or you're going to fail fast.
That's one way of looking at it.
Move on to other things.
Onwards and upwards to something that is also quite divisive, actually. Interesting. There were some conversations on the quants group over the weekend about Kelly and who does or doesn't recommend it. So I'm very keen for your thoughts on this.
Yeah, I mean, Kelly is, in my opinion, theoretically, and I put theoretically with, in inverted commas, is theoretically the best way to stake. And it's some variation of it where you vary your stake size based on your assumed edge and odds is what most people use.
And bank.
Yeah. Amongst.
So it also takes that.
Yes. So the Kelly staking formula is there. I won't go through it, but there's a lot of articles on the web that explain it a bit more. Like I said, theoretically, it gives the best balance between risk and reward, because it does vary your bet size based on your assumed edge. So of course, that logically makes sense. If I have an edge of 10% on a bet, I'm probably going to want to bet more compared to a bet of 5%. The cons are that, and this probably is something that depends on what you're betting and how confident you are in your model. I guess the first one is just a feature of Kelly. The variance tends to be quite high, so the bank can be erratic. So some people do tend to use half Kelly or quarter Kelly just because they can't take that variance. But the second con is probably the one that divides people about whether Kelly is useful or not, or the best or not, is that Kelly assumes full knowledge of what our edge is. And we never know that. There is uncertainty around our edge, and I've got a slide on our next one, which that shows it's actually bad being too confident in our edge, and it can actually work in the reverse. But if you think about it, if we think our edge is 10% and we're putting on a bet based on our edge being 10%, based on this formula, but our edge turns out to be 0%, then we've put on a pretty bad bet, and that can have a pretty bad effect on our bank.
Do you have opinions on full Kelly versus half Kelly, quarter Kelly? Because I see some people who I would put in the pro category, who still, with very nice balances and very nice histories, still use quarter. Do you have an opinion on that?
Yeah, so I have never used full Kelly. It's just too volatile. It's very aggressive. I agree. Half Kelly or quarter Kelly is the best for me. But again, it depends on your risk reward profile. If you're someone that's very risk inclined, you're willing to burn through a bank, and it doesn't matter too much to you because you would reload with another bank. I can see full Kelly being appropriate for you because you just want to get to as much money as you can in the shortest amount of time, and you're willing to take on that risk. It really does depend on everyone's individual risk profile.
I think that also plays into something we've discussed before, that often there is a correlation between people who have more analytical approaches to what they do and lower risk tolerances.
Yes.
And often that means that, if you're someone who's more likely to use Kelly, you're potentially also likely to not be comfortable with full Kelly, which is where,
100%.
quarter or half, even if that's en route to full Kelly, I have a lot of time for it. So it's good that you've got a similar opinion.
Yeah. So this Kelly results in a 96% chance of hitting our objective and a 4% chance of ruin. So I will stick on Kelly for a bit longer because the next slide ties in pretty well with that. And it's what I call the edge cliff. And I'm sure most people have observed. If you've been betting long enough, you probably have observed something like this. And I don't know a model where I haven't observed something like this. It's more common than not. So a common pattern when looking at a strategy's assumed edge is what I call the edge cliff. So this is when assumed edge and realized edge increase together up to a certain point before dropping markedly. So if you can see on the graph, I have it such that, so this is just for illustration, but I have it when our theoretical edge goes past 13%, that's when realized edge just drops dramatically. And there are logical reasons on why this happens. Unless we're someone that has perfect information in the market, there's probably going to be some markets or selections where we're going to have less information than everyone else. That might be a trial, that might be injury news in sports. So when we have an edge that is unrealistic, especially in a mature market, it probably is unrealistic. It probably is the case you're missing out on something rather than the market's missing out on something. This might not be true for immature markets, but for mature markets, if you're achieving edges of 20% plus, you're much better than I am.
It's interesting, something that a lot of the long-term successful people I work with consider is the difference between their odds, it's talking in a model that's probability based, their odds and the market odds. And if the delta between those is greater than X, they stay out because they assume, as you said, that they're missing something. Either the market knows something, someone's watching something and they know there's whatever that is, they're missing it. And they're not too proud to acknowledge that there are situations where that's the case. And I'm really glad that you're highlighting it because I think it is a really valuable progression in a development of a staking approach to consider when you're missing it and when they know more than you and when you should stay out, because it's just as important to know when not to bet, right?
Yep, it's just as important not to lose money than it is to make money. $2,000 lost is just as good as $2,000 gained. $2,000 not lost is just as good as $2,000 gained. One way people do use Kelly, given that this thing can happen, is that they'll put a cap on their bets. So they'll use Kelly, but they'll put a cap on how much they're going to bet. So if you do have these unrealistic edges, you're not going to blow your bankroll because you're going to put, Kelly says, put 60% of your bankroll down on this 120% edge. So they'll cap it.
Probably not.
Exactly.
Yeah.
You could still have an edge on that 120% theoretical edge bet. So, it might not make sense to not bet it, but it's very unlikely to be realistically 120% edge.
And there are a few ways you can do that, right? So obviously you can cap the bet amount, you can cap the percentage, or you can cap the percentage that you input as the variable to your edge, right?
Yep.
Like they're all different ways, but
yeah, you can play around that formula and just cap one of those constraints and it will give you something that you're probably more comfortable with.
Yeah. And it's more sustainable.
Yeah, 100%. We're doing pretty good on time. So the last slide I have is what I was talking about before is just odd slippage. So just be aware of odd slippage. I think it's something that people kind of get a shock on when they backtest using, backtested BSPs. They'll backtest a model's performance and then they'll go straight into productionalizing it, not knowing that what you are testing on is probably going to be unlikely to what you're going to get. So as we all know, the exchange is dynamic. Actions you take are going to affect the behaviors of other participants. So if you bet something, that's going to affect someone else betting. They might follow your win a bit, and the odds might come in.
The butterfly
and
effect.
if you're exactly, and if you're betting a lot, there's probably going to be not enough at that price point for you to take. So you'll have to take lower odds to get the full amount you want on. So it's very unlikely that your backtested ROI will scale linearly with increased bet sizes. So as you stake more, you're obviously going to be forced to take worse prices. And this is also probably true in the fixed odds game. You might bet some early, and the market's going to be a bit more sensitive early on. And to get the rest of the volume on, you might have to bet late, and the prices are generally going to be worse and more efficient.
I think that the easiest example of that, right, is let's take racing and BSP, and maybe you have an edge on long shots. And that's where you specialize, and you're looking at things between 30 and 50 bucks. For some reason, you have an edge on those. And you're back testing that you're getting on at SP of 30s. But then that was fine when it was 500 bucks. But if you're dumping 5,000, well, SP is no longer 30. Actually, it comes in, and therefore your edge is gone.
Exactly.
Just in terms of like a really easily visualizable one.
Yes.
Yeah, you're very, very right. And it gets even more complicated if you start offering money versus taking versus, that's why back tests are hard.
Exactly. And I think it's a good point that sometimes execution of your bets is more important than improving your model.
Yes.
Rather than just putting it all down on BSP, you might find the better way to do it is trickle it in 30 seconds out and put half of it on a BSP, and you're going to getting that 5% or even 2% better price is a lot easier than improving your model to get another 2% or 5% edge in most cases.
I've worked with several people in the last 12 months where they haven't changed their model at all, but they've come to me and gone, my execution's suboptimal. And these are people who are pretty professional at what they do. They've done it for a long time. They've gone, how can I fix it? We've worked together, and the percentage shift from not a lot of effort between two of us in each case has been phenomenal. And that is significantly bigger than what that would have been if they'd invested even a lot more effort than that in their model. And models can only get so good, right?
Yes, 100%. So back to odd slippage. There's no real way you can eliminate odd slippage. It's always going to be there. The way you should account for it, in my opinion, is always build in a buffer for your back tests and then make assumptions of reasonable but conservative slippage prices. So for example, if you wanted to bet at a longer price, say odds of 20, you might assume that you're only going to get odds of 18 or 19 in reality. And if you're still winning at that price, you can be a bit more confident in productionalizing it. And the last point I'll probably make there is it's always valuable to test new models at small stakes initially. I know it might feel like this might not be there forever, so you want to put as much down as you can on before this edge goes away. But you want to avoid jumping to the wrong conclusion. So a model may be profitable, but unprofitable at larger stakes. So don't jump to the conclusion that a model is just unprofitable. It might be profitable, but there's going to be a threshold for that. So it's better to come to that conclusion slowly than to abandon the model altogether.
And that's not even considering things like execution and whether you're going the right way there. Like, if I only got to say one thing in one piece of advice to anyone, it's test small. In every situation, it never hurts. Yes, you may lose some potential winnings, but the balance, it never works that way. It just test small for goodness sake. It is never going to do you a disservice. I think the other thing though is it's also if you can test early, because back testing is great, and I'm a really big advocate of back testing, but you can only do so much. And know I've quoted Paul a few times tonight, but something he said recently was, just start betting, even if it is the absolute minimum bet size that you can get on. Just start, because reality always trumps theory. But do it small.
100% agree with that. I think you're going to learn so many things that you didn't even know were going to happen by testing live on the exchange. So it doesn't hurt to test live. Just test at the minimum. And it doesn't matter about the money. It's just about learning. If it's the first time you use the API, learning about the API, but also learning about how things change. It's fluid. The exchange is dynamic, and it will always be dynamic, and we just have to work around that.
It will. You're right.
Cool. That's pretty much all I had.
Well, I've got a couple of questions on here too. So even before we open it up for questions. So first one here is, do you have a suggestion of how to go about testing for size? How do you incrementally go from small to large? How do you establish that upper bound as to whether it's a flaw of the execution, a flaw of market, a flaw of the model? Again, this is something, there's no right answer here, but in your experience, do you have suggestions in how to go about that, both in terms of backtesting, but also live?
Yeah, I think you'll never know with complete certainty where that tipping point is. And it's a great question, because everyone wants to know where that tipping point is. But if you test small enough and you increase gradually, if you have enough bets that are going on, you're going to quickly realize whether you're affecting the market in an adverse way such that your model is no longer profitable. Some models are going to do that quicker than others. It kind of depends on whether you have that critical mass of bets on that you put down on. But you're never going to know for sure what that tipping point is. But you're going to get a good idea by just testing small and increasing gradually. Don't test small then increase by a large amount, because then you don't know where that tipping point is. It could be anywhere between $5 and $1,000, and you're just going to be lost.
Do you have a suggestion of the period that you would test? Obviously, again, this isn't an exact science, but you said that you tend to review monthly. It's interesting. Again, several other people have said that that's sort of where their time frames sit too. Is try something for a month, partly so they're consistent in the windows, and it helps you see whether something is a spike or a trend. Is that how you go about it? So you're not just doing it for a day or two and then scaling up again and then scaling up. Is it more systematic, or?
So I do it monthly, which is it's kind of linked to how many bets I'm having a month on average. But it does depend on how many bets you're having. So if I'm betting AFL, which I used to quite heavily, a month's probably not enough, because I'm probably only having 20 bets in a month, and you can't really tell whether it's volatility as opposed to something not working in a month. Whereas if I'm betting horse racing and I'm betting every single state, you could probably do it weekly or fortnightly. It kind of depends. There's no real magic in monthly. The magic is in the critical mass of bets you're having. You need a certain critical mass before you can make the conclusion, is it volatility or something more systematic happening?
Yeah, no, I like that. Interesting question. I really like this one. In your opinion, is it potentially overfitting where you've back tested something, and in your back testing, it's negative at flat, but profitable in, for example, a progressive to win percentage bank? Right? These are the examples, but it doesn't really matter which ones. It's negative in one staking strategy and positive in other. Do you think that when does that veer into that realm of overfitting as opposed to a strategy that works with that model?
Yeah.
How would you potentially try and tell that apart?
Yeah, so that's a good question. I think in general, a winning strategy should be profitable across all staking systems. But there is a caveat there. If you did have a case where it's only profitable with one staking system, you want to find out why that is the case. Rarely there's going to be a model that will only be profitable on one staking system. Going back to my gambler's ruin first slide, if you have a positive edge, bankroll management is all about reducing your risk of ruin. But in the long run, you're always going to make 10% if your edge is 10%. For every dollar you bet, you're always going to make 10% on that. If you have a strategy that is failing on one staking system, but not failing on the other, I would be more worried about the case that your edge is actually negative, but just by good fortune in your back test, one staking system makes it look like it's positive. That's what I would be most concerned about.
Ways to check that. I mean, obviously there's all the rules of thumb of separate out from your test data versus your et cetera, but I mean, other ways of doing that are then to run across different periods, right? You know, if you've got a year worth of data and it shows across a year one, then split it in two and those things look the same, split it in four, split it in, is it consistent across different buckets? Because again, that'll help back test the hypothesis as to whether it's actually something where maybe you do have an edge. And I can imagine that there are some edges, some strategies where Kelly particularly might work and the others don't, because it's taking into account your edge on the market. I can imagine. I can't imagine the others playing particularly well, but yeah, you're right. Like I would definitely like it to be positive on all of them first.
Yeah, I think even in that case, if Kelly takes into account edge, but if your edge is always positive, if you have enough bets, the other staking methods should still return a positive outcome in the long run. I think that's something that people should watch out for, especially with backtesting using a fixed staking system, is that it could show up as positive on your backtest, but be careful that's not just due to outliers. So if you're backtesting and you say, oh, this has a 10% ROI, but it's coming from the fact that you put, it's just a flat staking system, you put $10 on 1,001 shot, and for some reason that won, and that got up, that's probably not going to repeat itself in the future. So be careful to weed out outliers in your backtesting as well. Not saying that those outliers aren't profitable, but you don't want to be reliant on an outlier as the only reason why you're back.
Do you have a rule of thumb for that? Like, is it that you take X quartiles or standard deviations, or is there a rule of thumb for what constitutes an outlier? Other than, obviously, I mean, I'm very visual, you know that, and I love charting things, and like with your thing where it shot up, I will look at that and go, well, come on, and then maybe remove that one. But short of that, do you have more of a data-led rule of thumb for what counts as an outlier?
I mean, you probably could. I mean, I haven't done this, but you probably could just remove your two biggest wins or something like that and see if it's still profitable. But I think if you test your system across multiple staking strategies, the effect of that outlier will diminish. For example, if you bet to win a certain amount, because you're not going to be putting much on that outlier. And if you're still winning using that staking system, then you can be more confident that your staking system in general is a winning system. So I really like that betting system.
That's a good consideration. Something, there's a question here around commission and how you may or may not consider that as part of your staking thing. So if you go back to your Kelly view, does your Kelly include commission? Because mine does. I always make sure I write Kelly with commission. So it's taking it into account. But I know that a lot of people's staking strategies, they don't necessarily, and it is real. Like at one level, you know, the gambler's ruin, a version of that is, if you don't take me literally for this, but ballpark, if you bet on every $2 BSP runner, eventually you will basically just lose commission, whatever your commission rate is, because basically, unless you have an edge, $2 shot will get up 50% of the time, and you'll lose 50% of the time, and you'll lose your commission and nothing else. Ballpark. Is there a way that you factor commission rates into your consideration of the different staking approaches, or how you go about it?
No,
does it change if you're? And so I was just going to say, like, you know, if you're betting on New South Wales on a 10% MBR, does that does that change compared to looking at a 5% or a 2.5 AFL? Or?
Yeah. So since I bet on Betfair predominantly, but I also bet on bookies as well. I translate them into the same language. So I'll take out commission from all my bets on the exchange, just so it's comparable to what I put on fixed odds. So yeah, to your point, to your question, to your example, on New South Wales for a $2 shot, my odds will be lower than, for example, on racing on Victoria horse racing, where my commission will be lower.
Yeah, and obviously there are a few ways of doing that. So you're changing your odds in Cali. It's at the end. I think you multiply by commission, right? I think that's where it comes in the variable there. Yeah, obviously multiple ways of doing it, but I completely agree. It's really important to consider, and a lot of people don't. They think they've got this wonderful winning model, and then they're like, "Crap, what's this? What? Oh, wait." Another element that can catch people, so it's really important to consider.
Yeah. Commission, commission, even though it might seem like a small amount per market, it's huge, especially if you're only long term. You'd be lucky to be a 5 to 10% edge better, and if commissions 2.5 to 5%, that's a large chunk of that.
Yeah, and this is why when we talk about things like discount rates, this is why they're so important, because having a 50% discount rate, for example, means you're paying half as much commission, which is really important. So that's a really good question. Thank you for fighting for the answer. Another one here around this is potentially either if you're using this as a feature in one of your models, or if you were someone maybe manual trying to figure out the best way to bet a set of tips. So the example is, if you're taking an ROI percentage over a period of time, let's say you've got a tipster using level stakes, could you potentially use that to calculate the edge in Kelly as a sort of finger in the air figure, instead of trying to go, well, each bet, this is my edge. For this tipster, this is my edge. Do you think there's validity in that?
Yeah, 100%. That's probably the best you can do. If you're someone that's just betting off tipsters, you won't know unless they tell their subscribers what they
think their edge is.
Yeah, what they think their edge is. The best you can go off is their historical edge. But then there's a lot of I'm a bit mixed on tipsters, but just be careful with tipsters. There's nothing to say their historical edge will go into the future, and we all know some tipsters do dodgy things with manipulating their results. So just be very wary with that. Is all I'd say. It's out of your control, that edge, and if you're Kelly staking off that, that's just an extra degree of volatility you have to deal with.
Really like that, and it's a really good sort of point to end on, I guess. Thank you very much for taking the time on that, Jason. It's brought together a lot of different conversations that we as a group and across meetups and across different conversations have had over the last couple of years, and brought it all into one nice, concise view. And you being you, I knew that your slides would also be on point. So thank you very much for that. As someone's just sort of said in Slack, it was really thought-provoking, and that's what we aim to do here, right? It's not about giving anyone what the right answer is. Sometimes it's pointing out the wrong answer, but most of the time it's encouraging people to think about things and to consider elements that they might not otherwise have considered. So thank you for playing part of that, and for putting this together. And I'm really grateful too for you putting together a bit more of a tutorial on this that will give people the ability to run some of these sims themselves, and play out what that reality might look like for them with their own variables in place of the others. So thank you very much for putting that together. I do have a couple of other things to flag just before we wrap up. If you have any other questions for Jace, he's a great guy and is on Slack, and you can always hit him up there. So please do reach out, particularly in the meetups channel. There's some great conversation going on there, so good to continue that if you've got opinions or want to bounce. We have a couple of cool things coming up in the next little while. So next month we've got Peter Webb from BetAngel coming and talking about ways of automating in BetAngel, which is, I think, really cool, particularly because there have been some changes to the software over the last sort of 18, 24 months. And I think that automation through one of those tools, A, works really well for a set of people, but B, is an excellent step in a journey to see whether it's worth a bigger investment to find a different approach longer term, depending on what you need in that space. And then in March, we're going down the AFL route, and we are going to be having a meetup with an AFL focus. So if you're keen on that, my take on AFL is that it is probably and this is very topical given it's you, Jace, but it is probably the easiest sport to start on from modelling, because there is just so much data in such an easily ingestible format, which is why we're focusing on it. Because I know a lot of people get a bit intimidated by starting with racing because it's such a big field and people don't understand it, and there are so many variables, and where do you start? And the data isn't necessarily easily available. Whereas for AFL, it is, and there's some wonderful packages out there that make that easy too. So we're hanging out with that in March. So hopefully you guys will come back and join. If you have any queries for us, you'll get me, Ben, Ivan, the automation team. Feel free to hit us up, automation@betfair.com.au, or in the Slack community we are around. I hope you've all enjoyed tonight and got something thought-provoking from it. I've certainly enjoyed it. I missed out last month when we didn't have one. It was the first time in 2 years nearly that we haven't had a meetup or a workshop, and I missed it. So thank you guys for being around and being part of tonight. Finally, what we do, as Jason said several times tonight, we're supposed to enjoy this. And it's supposed to be safe and good for you and good for your wider mental and physical health. So please continue to enjoy what you do and gamble safely. Stay safe, guys, in these crazy times, and I look forward to seeing you all soon. See ya.